All right, hello everyone, and welcome to our flexible and easy to use letters of credit webinar. All right, and my name is Derek Layton, and I will be presenting this webinar with my friend and colleague Michael Young. Today we are going to discuss those public unit deposits you guys have on your books and how you can use letters of credit to secure them, allowing you to manage your liquidity ratios and ultimately maximize your bottom line. Just a couple of housekeeping items to start off here. We have muted everyone just to help the webinar experience. So if you aren't muted, if you wouldn't mind, please mute yourself just to kind of cut down on that feedback. And then secondly, one question we always get is will the slides be sent out? And then everyone logged in today should receive the slide deck just shortly after the webinar. And the webinar will also be posted out on our members-only website for those at your institution who aren't able to make it today. And just real quick, a little bit about myself and Michael. Myself, I started my banking career in 2014 at a local community bank here in Topeka, Kansas. In 2018, I joined FHLB as a lending analyst, and then 2020, was promoted to a lending officer, and I still hold that current role today. And essentially, I just help assist, you, our members, with product education and current and prudent funding strategies, which allow you guys to make intelligent borrowing decisions and balance sheet decisions within your institution.
Yeah, and I'm Michael Young, and I've been at the bank since 2012 and had various positions. Kind of looks weird on there, going from accounting, enterprise risk management, lending. And then in the past few weeks, I recently changed roles to our marketing and member solutions department. So I'll now be assisting members in a different capacity, but in similar role as I was in lending.
Thank you, Michael. And just kind of what I like to do on all of our webinars, I like to start out with FHLB Topeka's mission statement, and that is, FHLB Topeka makes a difference by providing reliable liquidity and funding to help you, our members, build strong communities. As a lending officer and Michael, now the senior marketing and member solutions officer, our goal is to be your trusted financial partner. We are constantly in communication with our membership, and we can provide assistance and advice on a wide array of topics, not necessarily just letters of credit. If you have any questions or are interested in what we hear is working within our district, please don't hesitate to reach out to your account manager or the lending desk. All right, and just kind of getting into the webinar here. The first step here is what types of letters of credit we have at FHLB. And then a lot of you are probably familiar with this first one, just our simple standby letter of credit. That is what probably 99% of you use as a letter of credit, so you all are very familiar with that one. Another one we have, which not very many people know about, is our confirming letter of credit. There are reasons, that one isn't as used as much. It get a little more complex than just our simple standard letter of credit. But those confirming letters of credit, essentially, we would issue those to secure your letter of credit you have to one of your customers. Again, those can get kind of complex, and just if you do have any questions about that, I would recommend that you reach out to us on the lending desk or your account manager, and we can kind of go into details on exactly what that letter of credit is. Again, 99% of the time, letters of credit will just be those simple standby letters of credit, but we do have options for the confirming letters of credit. All right, and then just a quick refresher, I'm sure a lot of you deal with letters of credit, constantly throughout the day at your institutions, but just a quick refresher on exactly what public unit deposits are and why we must collateralize them. Again, as you can see here on the screen, just some examples of public unit deposits are, your local school districts, state or county treasurers, hospitals, rural water districts, et cetera, et cetera. And one question that we always get is what is defined as a PUD. I think kind of generally here, at FHLB, any depositor that receives $1 or more of public funds can be considered a PUD. Now, ultimately, that's not a that's not a rule. There is some gray area around that, but generally going about that, if any depositor receives any public funds, they can be considered a PUD. Ultimately, though, that decision does rely on you guys and what you consider a public unit depositor. So we would kind of recommend, if you have questions on it, maybe talk to your examiner or your regulator and kind of go through with them and see what they would consider a public unit depositor. Obviously, we do our due diligence, to make sure it makes sense that we're issuing it to an actual public unit depositor. I'm not gonna issue a letter of credit on Michael Young's checking account. So we do our due diligence, but ultimately that's kind of on you guys. To what is defined a public unit depositor. And just kind of the rules behind public units and why they must be secured. You can see there, per the FDIC, public unit deposits must be insured over that $250,000 FDIC limit. In the unlikely event that a depository bank, credit union, any financial institution were to fail, the FDIC doesn't want to negatively affect the municipality as well, so that is why we are required to insure their deposits over that $250,000 mark. And just kind of the two main forms of securing those PUDs. Again, I'm sure some of you are familiar with that first one there too, and that is pledging securities. Historically, and throughout the entire banking history, those probably are historically the most widely used method. Probably because, we've only been, I don't know the exact date, but I think letters of credit have only been around since maybe the early 2000s. But again, pledging securities, historically the most widely used form, but, letters of credit have definitely been starting to, come on, and, your beneficiaries, your customers are really starting to prefer them, as there's a lot less hassle with keeping up with the values of securities and, just the paperwork it takes to keep up with those. And we kind of got into it on that last slide there. There's kind of some of the downfalls of pledging securities to secure your PUDs. First and foremost, in order to meet the eligibility requirements to be pledgeable, securities must be very liquid, meaning your institutions are typically putting on comparatively low yielding securities on your books just for pledging purposes. So not getting a lot of bang for your buck there. So that means, yield and spread are potentially being given up and ultimately affecting your guys' bottom line. Secondly, pledging a security encumbers a highly liquid asset, which decreases balance sheet liquidity ratios that institutions so closely manage. Once the security is pledged to collateralize the PUD, it moves off balance sheet and is no longer included in those ratios. And I know just kind of speaking to that a little bit more, the current, market and rate that we're in, it's going to vary, institution to institution, obviously, but kind of what we've been seeing as a whole, and you can even, tell that through our advanced usage, members' liquidity is starting to dry up a little bit. And, we're seeing, more need for liquidity throughout our district. And last, but certainly not least, pledging securities requires a lot of effort by both the beneficiary and you guys, the depository, to monitor the market values and make sure the amount of the deposit is always insured. This often requires signatures by yourself and your customers, which is a big reason why beneficiaries do prefer letters of credit to pledging securities, just to help cut down on monitoring and all that paperwork that those require.
And I will chime in here to Derek's point there. It also not only helps operationally from the beneficiary and the member standpoint, but you also have to remember that beneficiaries, when they come in to get audited to ensure those deposits were collateralized, that process goes a lot quicker, right? Which also reduces some fees for all parties.
Yep, for sure. Very good point. All right, so now that we've talked about pledging securities and a little bit about letters of credit, I just kind of want to get into exactly what a letter of credit is. Essentially, the letter of credit allows you and your beneficiary to use the Federal Home Loan Bank's AAA rating to collateralize your deposit rather than pledging the securities. Our high rating ensures the safety of your beneficiary's deposit and makes our letters of credit so widely accepted. If the depository were to fail, the public unit could draw on the letter of credit, and FHLB would cover their deposit amount, allowing the beneficiary to receive their full funds. And we've never run across an eligible beneficiary that doesn't accept a letter of credit. To my knowledge, every beneficiary we've been in contact to, I'm sure you guys do, they don't mind the letters of credit at all. They might prefer them, actually.
Yeah, I will chime in on that. There's been a few situations where when trying to get a PUD money, that's one of the factors they take into consideration. How do you collateralize it?
Yeah, and we've kind of been mentioning that throughout these last couple of slides here. Keeping up and monitoring, the values of the securities. I'm sure if you guys are in that situation, or if that's your role at your institution, that maybe has been quite a headache these last couple of years with how quick rates have fallen and the values of some securities have decreased. And then I'd just like to say the letter of credit is a set it and forget it type of deal. Issue the letter of credit for however much you need, however long you need, and then don't worry about it until it expires, and you can take care of it then. So just a lot easier, less stressful option to secure those public unit depositors.
And yeah, so we're going to reiterate a few, why you would use letters of credit. We've already briefly kind of gone over this, but they're convenient, fast, and efficient. And when we say that, it is quick. You send in an application, you can get on members only and do online submission, fill out the application, and it's done. You can even do a 5-day forward settle on those. I say you're out of the office when you need to renew a letter, and go ahead and issue it in advance, and that's another win. Obviously, this reducing your safekeeping cost and operational cost associated with that, with pledging securities. And then we have now that rates have risen quite a bit, we don't have much of the forgotten call situation going, but when that does happen, and you forgot to say that mortgage-backed security had a call, and you went in, it got called, and now you're out looking, scrambling to try to find to purchase a new security that's typically lower yielding than, say, a loan or another alternative security that's ineligible to pledge. Another positive is you're able to, instead of purchasing securities, you can monetize on those assets you already have on your books, in the sense of those loans, the collateral that you pledge with us, you're using those to secure. So it doesn't matter whether it's for advances or letters of credit, all collateral pledged with us takes those and allows you to use the letter of credit to improve liquidity.
Yeah, that's a good point from there, Michael. With the blanket pledge agreement, you're not having to pledge any sort of special collateral for these letters of credit. So yeah, that's definitely a good point you brought up there.
So yeah, all collateral. So collateral capacity is key, especially in this environment. And we'll get in. Sorry, Remington. Oh, skipped a few. Oh, all right. Yeah, and then the last one, boost earnings, right? Because you can substitute your security investment strategy, putting higher yielding assets on, whether it be loans or securities that are ineligible. But I think the key here is it just allows you to maintain a resilient, flexible balance sheet, especially in this upcoming environment. I think that's going to be key to navigate the uncertainty. And now we'll go over the tool, we have this letter of credit tool that we can run and customize specifically for your institution. And this will illustrate the positive impact on liquidity and earnings. And although it won't demonstrate the flexible balance sheet part, that's definitely something I'm going to reiterate 1,000 times. So if you'd like to see this tool ran for your specific institution, please let us know, and we'll go through it. And the first part is going to be the key here. You want to make sure you have ample collateral. So this is just an example institution, and they have ample collateral to go ahead and take down a letter of credit. So we're going to use $45 million on how it enhances their liquidity, right? So instead of pledging securities, they're going to unpledge $45 million of securities and issue a letter of credit. And as you can see, both liquidity ratios, on hand and liquidity ratio, nearly double. And so that's a huge pickup, especially as Derek mentioned earlier with the liquidity crunch coming up and being on a hot topic, especially for examiners.
For sure, and just kind of want to reiterate, this tool, this is, something that our member solutions, team created. So, if you guys want this ran for your institution, to see if it is more profitable for your, for your institution to use a letter of credit rather than securities, definitely reach out to us or your account managers. We'd be happy to run this for you guys.
Yeah, and so that's the boost to liquidity, right? And now let's get into what matters, the earnings. So we took $45 million, we unpledged those securities, and whether or not, obviously, you might still have those securities on your books, or you can sell them, right? Hypothetically, in this environment, there's that break-even analysis you could form where you take that loss, sell those securities, maybe at a loss, but not a big enough loss that you can offset, say, loans that you're going to replace it with, reallocate that $45 million. So that's something to look through when you're looking at your security portfolio. You can see here that we include the letter of credit fee. What's not included is all that operational expense with pledging securities and all of that. So we're going to compare this apples to apples. We will run it for your specific institution. You can provide us numbers of whether you're going to use securities or loans and what rate you think you're going to purchase. Say a specific security, you can provide that, or the pool of loans that yield on a pool of loans that you're wanting to use. And so this could change, and again, we can run it just for your institution. But in this example, you can see that it boosted net interest income, just a touch there. Oh, this example is a bigger institution. But we got another 20 basis points pickup on ROA, and ROE, we saw a little bit over 2% pickup just by using $45 million in letter of credit. And at the end of the day, the net additional annual income you would have earned is $2,500. And again, that doesn't include the savings and allocation of time you use for monitoring those market value of those securities and, say, allocating that time to generating new loans or deposit strategies to lower your overall cost. Now we'll go over the cost. So the fees here for the simple letter of credit, it's 12.5 basis points per annum. So a $100,000 letter of credit is $125. So the minimum is $125. And one thing to note here, and then the confirming, is 25 basis points, and the minimum on those are $500. The minimum fee. Fees charged are on the date the letter is issued, so that will hit your account the day it's issued. And if it's greater than $5 million, you can elect to have the fee charged quarterly. Obviously, greater than $5 million and goes longer than 1 quarter. But the letter of credit cancellation. So you can cancel it at any time. Beneficiary has to sign that and send it back so both parties are aware that letter is no longer outstanding. And again, we'll give you that prorated fee that we charged you up front for the unused portion of that letter. And one common question we do get is, can you issue multiple letters, right? Because your beneficiary is likely not going to have, $5 million or $45 million outstanding for, say, a year. So absolutely a beneficiary you can issue multiple letters to the beneficiary. If you go back and look at their deposit and you know that the school district, they're going to have money going out in August, and to stagger those letters, one, to make sure you're utilizing your minimum amounts, right, if you're doing lower dollar letters of credit, but two, it allows that flexibility of not overpaying or over securing the amount you're actually needing to cover. And we've recently added, when was that, 21? A few years ago, we've been adding to enhance our, allow all members to benefit from our product, or our cooperative. In the dividend, we've added the dividend capital stock requirements to our MPF program and letters of credit. So although it seems small, letters of credit capital requirement is 25 basis points. Doesn't seem like a big deal, but that is 1.2 basis point savings if you look at our fourth quarter dividend rate. So it takes that letter down to 11.3 basis points. So every penny counts. Like you mentioned earlier, I'm an accountant. And then the tool or things that you'll need, just an overview. You have your letter of credit agreement, which most institutions have, but that's just a one-time deal. Once you have that ready, you're good to go. And then each time you need to submit a letter or issue a letter, you would submit an application. And again, that can be done online, or you can use the fillable PDF and email it. But we have definitely seen a bigger uptick in members using the online capabilities to issue those letters.
Yep, for sure. And just kind of expand on that, what Michael was saying with the online feature. If you are the one dealing with letters of credit, either reconciling them or the one issuing them, if you don't have members-only access, you'll definitely want to get that, because that's where you find your fee tickets and then the actual letter itself, if you want a paper copy of that. So you definitely want to have access to our members-only website if you are the one at your institution dealing with the letters of credit. Just kind of, after, going off of, what the tools that are required to use a letter of credit, we just want to talk about a little bit of the letter of credit system. So as we've kind of mentioned, what Michael did, we have it, again, and I'm sure most of you are already aware, we do have our letter of credit online system through members only, which has been a huge success. Nothing but great feedback on that from our members. But also, for those who do like to fill out the PDF application or are used to that submission type, we do still have that easy fill PDF application that you can email us just at fhlb.lending.fhlbtopeka.com. And then,
and I don't want to call Derek out here, but I'm going to see if he knows how many members use the online. The percentage of our members that use a letter of credit use members only.
I'm not quite for sure on the exact number, but last time I looked, as far as the submission through all the letters that have been submitted through the online system, I believe it was somewhere in the 70% range of all of our letters of credit.
So that's huge. And that's why we receive such positive feedback.
Yeah.
Back, Derek, it's 79% year to date.
79, all right. Well,
79% year to date, 76% throughout 22.
I wasn't too far off that. And again, that just kind of gives the huge, success and, benefit our members have seen through that system. We are, really happy that you guys do enjoy that online system. And just kind of speaking of the online system, if you aren't familiar with it, we just provide some screenshots of it, And the very first thing I noticed on there is that overnight line of credit rate back in March of 2021 at 0.36. That seems kind of crazy where we're at nowadays. But, that just kind of goes to show, how drastically and how quickly things can change. So you kind of want to always be, be prepared for where things might go. Don't want to become the blockbuster of the industry. But again, here you just log into our members only site, and then letters of credit tab. That first button there, the application. And when you fill it out online, this is all you have to do. You have to fill out 5 fields, and that is your application. As soon as you do that, your letter of credit is instantly submitted. You're good to go. And I believe you can do this until, it says on that bolded section there, kind of at the top. Applications can be submitted anywhere between 9 and 3:30 online, or through the emailed PDF application. It's just super quick, super easy.
Yeah, and right there you can see the issue date. So if you're going to be out of the office, going to a conference, vacation, hopefully vacation, you can just type that in, forward settle it up to 5 days. And if you do decide to cancel it, there's no fee charge if you cancel it within that 5 days.
Yep, yeah, to reiterate that. So say you guys issue the letter of credit, tomorrow, and you want to cancel it in 2 days, there would be no fee charge because the letter of credit never actually got issued. Again, here, this, the more traditional one, also the PDF application process. Again, still really easy way, to fill out the application and everything like that. Just a couple more fields that you would have to fill out. And for those of you not familiar, this is our PDF application. Just fill out all the information. Then again, you would just email it to the FHLB.lending@FHLBtopeka.com. And we would get that, if you get it to us before 3:30, we'll issue it for you the same day.
And we'll send you an email saying we got it. Looking at this application, I've never seen it side by side like this. Obviously, that's probably why our numbers are so high on members only usage.
And with that too, just some more information on letters of credit through our website. Again, that first link there is actually where this webinar will be posted for for people at your institution who were able to make it today. So if they do want to watch it, they can go out there. And again, the slide deck should be emailed out to you guys later today. And kind of those links down there are guides for you and your beneficiary as far as letters of credit and maybe questions you might have about it. Each state, kind of has their own different details, I guess. So the links there, would take you to each individual state's beneficiary letter of credit packet. And with that here, this is just our contact info. We got all of your RAMs, Leslie, the manager, and the member solutions, myself and Michael. Again, guys, if you ever have any questions, we always, urge you, please reach out. Questions, letters of credit, advances, collect anything about FHLB you might have, we're always happy to talk to you guys.
If there's one thing we've learned, there's no 2 members alike, so you want to make sure you're getting specific.
And if you guys are just curious to see what, all your friends are doing, all your peers at other institutions, we can kind of, again, like I said at the beginning of this presentation, we're happy to talk about with you with what we're seeing within our district.
And we just want to make sure you're aware of all the tools in your tool belt, how to use them.
All right, and with that, we do got a couple more minutes here, so if you guys have any questions, please feel free to enter them into the chat box or that Q&A box, and we'd be happy to answer those for you.
So we have a question here, can I add a new beneficiary on the online application?
Unfortunately, if it is a brand new beneficiary you guys have not issued a letter of credit for, you would have to submit the PDF application at first, just again, so we can kind of do our due diligence, making sure that is a public unit depositor. But after you submit that application one time, that beneficiary is going to be available for you to issue letters of credit in the future. So long story short, for the first time, you have to do the PDF application. After that, it'll be available online to you.
Deal. Good question.
All right, and with that, guys, not seeing any more right now. Again, all of our information is here on this screen. So please feel free to reach out to us or your account manager, and we'd be very happy to talk to you guys. And again, thank you for attending today. We really appreciate it.
Enjoy the games.